So here we are on Friday, November 12th, 2021, skipping past the beginning parts, talking about the markets and talking about the disclosures that we need to talk about. And I'll mention that investing does involve substantial risk, and past performance is not a guarantee of future results. Losses can happen. We know that. It's investing. As always, use your best judgment when investing, but make sure to understand that this is for educational purposes only. And as we talk through this, it's important to understand that I do a lot of looking at the daily charts, but you can use this on a 5-minute chart, a 10-minute chart, 30-minute chart, whatever you want. My preference, people ask me all the time, I like to look at 30 minutes as a minimum because I have more of a bigger swing trade desire rather than getting 1 point on something really quick, right? Where it can move in either direction. Or even less than that, 30 cents or 10 cents as a scalp trader. That's my preference. Well, let's go over some of the things that are going on over the week. To the right, you see the Qs. The NASDAQ 100 is off its highs. It tried to get up there. It's 10 points off, 2% off of the all-time highs. Not a big deal. Trend still generally up. We did see it dip down a couple days back, if you'll notice on the right-hand side. And you'll see that we did hold support pretty well there at about 390 level, currently trading about 391.85. The futures are up slightly this morning. Bitcoin down a little bit. Gold ever so slightly down, although gold and silver have been monsters lately. Really great runs over the last several weeks as the concern about inflation is really starting to pour up pretty well. Even with the dollar moving higher, it's pretty interesting to see that gold is doing so well on a comparative basis. Theme this week, I got a question if too much of a good thing is too much. I mean, we all know about eating too much candy. You get potentially, I don't know, can you ruin your sugar and have some kind of diabetic situation going on there or some kind of imbalance with your sugar, cavities, stomach aches. You kind of every once in a while have to back off because, you just can't absorb all that goodness. Well, we saw an 11-day winning streak broken this week, and that was on top of all of these overbought signals, and I was tweeting those last week. And if you take a look at this, you'll see that we had all this overbought levels that were pretty significant. And when you see that, how many are we talking about? 8? 1, 2, 3, 4, 5, 6, 8. Yeah, plus this one here. This one right there. And then you start to see that slope down, and we were kind of holding on that +4 level that was going on last week. There was inevitably a time when we had to see a bit of a correction, so we'd cool off the indicator, which is right there. So I think that what's really interesting to note on this is that we have a situation where we've seen a substantial amount of overbought readings on a variety of different indicators. We can go also to here. Go the Spearmint starting to fall down from a 90. We talked about this last week. We're seeing that the McClellan, not as high as emergency levels, but clearly you could see that roll that was going on and that turning over and weaker overall advanced declines, which is what they measure here on the McClellan. And that was something to really pay attention to. So we did see the pass of the stimulus bill, which you got to wonder if it's, again, too much for the economy to handle. And you may say, well, what do you mean too much? Well, again, back to our theory of or theme of is too much of a good thing too much? You have to wonder that if we could absorb this level of money that's coming into the economy without triggering massive inflation. And if you think about it, even though the current administration is trying desperately, absolutely desperate to prove that pushing more money into the economy through this infrastructure package will actually reduce inflation, cause a deflationary move. I don't know, just bizarre. Doesn't happen that way. But it's Econ 101, right? When you have too much money that's chasing too few goods, which is going to increase substantially, you get inflation. And even the Fed is talking about how inflation maybe isn't as transitory as they first let on. So they're going to be looking at that. Now, markets trade two ways. I want to talk to you about this. I think it's really important to understand something. This is a key. This is a fundamental understanding of when we talk about market profile, we talk about all of the adjuncts to it and the lessons and the understanding of how we utilize the TriggerCharts Commander Series, the altimeter, the autopilot, when we look at the radars, and when we look at the overall understanding of what this is built on, which is tick-by-tick volume and price information put into our algorithm in order to show you where those key points of support and resistance are. And what comes out of that is a basic understanding. One, this is important. If you're taking notes, here's some notes for you to take down. Number one, when we move above key areas, there's a rule. The rule is do not short. Now, I was talking to some people recently this week, and they were asking me, hey, you know what? I've been trading this week, and I've been having I've been kind of having some mixed results. I said, let's take a look at where you trade. We opened up, and we did a screen share, and we took a look at where they were buying and selling. And I said, wait a minute, let me ask you a question. Why are you buying here, as an example? It was above the red, above the resistance level, above the unfair high, and as we call it, the lift, right? This level right here is the lift. So you got the lift, you got the stall, and you got the cruise and the stall. Sorry, this is the unfair high. Unfair high is the red, green is unfair low, and you got your kind of point of control right there. Any way you want to look at it, whatever you want to call it, the fact is, let's kind of label it and keep it very easy. And we have right here, that is resistance. That's a key mark. We'll call it the key volume mark, if you will. And this is support. If you trade above this level, do not short. It's very simple. Do not short, right? When you're above that level. It's very simple. And if you look at it, well, I can't do that. We got to move this here. When you're below the level, when you're below support, do not go long. When you're below the level, just take a picture of that, a screenshot of it if you want. It's a mess, but take a screenshot of it anyway. Do not go short. Do not go long. If you just don't do that, you'll keep yourself out of a lot of trouble. Now, what was happening was this particular person was trading all sides of that. And I'm like, why? I said, wait, first of all, the color coding, red, it's not showing you to go long. Well, I thought it would bounce. I'm like, but that's why we have this. Pay attention. And if you would have paid attention very simply on this chart as we're looking at this here, a great shorting opportunity right there from September all the way through to October. A great long opportunity all the way from mid-October through the start of November. Just stay on the right side of the trade. Now, here's a couple of things else you want to know. Markets, they trade in two ways. They either slow horizontally through time right here, this box that I'm drawing right here, slow horizontally through time, or fast vertically through price. So we're looking for these kind of moves. We're looking kind of these breakdowns, these big moves, vertical. This is a horizontal move through time. This is a vertical move through price. That's what we're looking for. Very key. These two things right here are really the most important part of this entire process and strategy, as well as do not be short, do not be long. Very simple. Very, very simple. If you just utilize those two concepts, you're going to be way ahead. Now, which one presents the greatest trading opportunities? Which is fast vertical through price or slow horizontal through time? Chat me right here. I want to hear from you. Everybody wake up. It's the morning, but it's going to be a great day. Everybody's had their coffee, the Red Bull, maybe a little vodka and Red Bull, something. Which one presents a better trading opportunity? Slow horizontal through time or fast through price? Yeah. Well, we got one person that's awake. Two people. Oh, there we go. Yeah, exactly. Fast through price. Fast through price. That's what we're working on. We want to go and we want to have the fast through price. We want to find where those opportunities are. When do those opportunities arise? I've gone over this before. We could find when we look from right to left that there's nothing there. where there is resistance points, where there's a lot of levels and a lot of price and a lot of action, it doesn't move as fast. Yeah, it moved fast there, but it really charged down here where there was nothing to the left. Kind of look this way. You know? So the bottom line is when you're looking at the opportunities that are presented in a market profile-based structure, we're looking for, again, I'm just going to hammer this home because I want to really push this lesson today, slow horizontal through time. Interesting for investors. You know, if you want to buy, like a Pepsi or a Coke, and it's kind of like just slowly but surely moving, this way, a little bit of. If you want to make money as a trader, you want this, right? That's what we want. We want to the moon. So 2 important concepts right there. Markets trade in 2 ways, slow horizontal through time, fast vertical through price. Also, the other point of do not go short, do not go long. Write that down, impart that to your memory, okay? And, of course, start the day with a Red Bull and vodka. That's what we learned today. I think we can close down right now and say it was a good lesson. It's a good day. But we'll continue on. By the way, if anybody wants me to look at their stocks, type it on right where I'm going to put the information on where you can click to get the links right there in the chat. Put your symbols in right there. Let's see what else we got. Earnings results, kind of a flip. Interesting what's going on is that we're seeing that earnings results are coming in, but what has happened is that they're being crushed. You saw a couple of companies this week, more than a couple of companies, get eviscerated. I mean, yeah, Beyond Meat got smoked, so to speak, when they had their numbers come out, but those numbers weren't good. But you looked at a few other names that we're going to go through today, just like 1 or 2. They just did not do so well. And some of them were just big disappointments. I think the big issue right now is expectations and, hey, what's going on in the future and how is this going to impact things? And were things priced to perfection for a long time? Anyway, is something we talked about. Still, we're seeing better numbers, but questioning, is this as good as it gets? Well, remember we talked about, the Spearmint peaking last week? This is exactly the quotes right here. When we look at this is cut and paste from last week. So that was right about here. Let's see. This is 1, 2. This is Friday, Thursday, Wednesday. So it's right about here. Right about there. We talked about this. Not this one. Not this one. Nope. So we talked about this last week, and we looked at, hey, you know what? What's going on with the Spearmint? What's going on with the KRI? Oh, that's not what we want. KRI. Here we go. Yep. We saw this moving up. We saw it was a +5. The week before, we saw the +4s were consistent. And we got that roll over the last couple of days to relieve some of the pressure on this. So where are we now? Well, markets are near equilibrium, right? What this says very clearly is the overall market condition as measured by the KRI algorithm is near equilibrium, which is a slight bias towards the upside movement. Watch for the current trend to continue with directional movement skewed towards increased demand and not enough supply. Well, that's interesting, but you know what? What's the trend? The trend has clearly been on a daily basis in a midterm trend higher, long-term trend higher as well, short-term trend lower. Right? We know that, right? We see that, this big move up, and the short-term trend is right here. Since October 4th, basically, or October 11th? So about a month ago, fully, trading up and then rolling. So look for upside opportunity as we get there, but realize right now we're still overvalued or overbought at this point right now. Coinage, Bitcoin and other Ethereum is hitting all-time highs this week. Questioning whether or not that's all about global strife that's going on, the potential for some of the lockdowns that we're seeing once again, and, of course, inflation. So that's 2 big issues. U.S. government not happy with their inflation numbers, the highest wholesale final prices since the inception of the index back in 2010. CPI and PPI tracking well above expectations. The Fed's stuck. Their backs against the wall. They don't know what to do. They are absolutely frizzled and fried. We're going to see, I think, nothing happening until we find out who President Biden is going to be reappointing or appointing, either way you want to look at it, whether it's Brainerd, whether it's Powell, and what that means for the markets. Right now, I don't think anybody wants to make any moves with some fragility out there with the concern about what will be the next leading party of the Fed. But they're stuck. They can't do anything. They've made their bed by saying that inflation is transitory, and they were so far wrong. And by the way, newsflash, hold on. Don't do anything that may cause you to fall over and faint on what I'm about to tell you, but the Fed is god-awful, terrible on their economic outlook, on their predictions. They are just horrible. I'm not even saying they're slightly good. There is no redeeming character and quality about any of their predictions in the past. All they're good at is saying that, you know what, we are going to reduce rates to stimulate the economy. Other than that, they are not useful at all. So let's talk about some of the things we talked about last week. We watched, Myrna and Planet Fitness reaching all-time highs. Myrna getting crushed. We saw Etsy getting whacked. Hey, what's going on here? Roku. This week we're going to look at a few symbols also. Let's get right into it. And I'm going to talk about some of yours. We've got a good list going on right here. Let's go here. Let's look at Penn because Dave Portnoy's in the spotlight right now. I think I typed that in wrong. There we go. Penn, he got a lot of accusations going against Business Insider. A whole major thing going on for publicity purposes right now. This is classic right now, and if you can see this from what we just talked about on this daily chart, this is a long move through time, right? We've seen this kind of consolidation that's right here. And when I draw that on the chart for you, actually, let's use the box tool from TradeStation. When I draw that, I like to see that. One of the things you have to note is that not only is it important to recognize when price is moving slowly through time and consolidating, the next thing you have to ask yourself is, what's the next move? Usually what happens is as we get tighter and tighter moves on a consolidation, something big is going to happen. And as we see the distance between the top of the altimeter and the bottom get tighter and tighter, it's starting to get tighter and tighter, the next potential move is always, or usually can be, exacerbated one way or the other. Now, you look at this in a bigger picture, and let's take a bigger rectangle right here and really kind of extend this out. And you got to say that the bottom was lower than the bottom of this last one, and you're starting to move down, incrementally move lower and kind of like look from where we were, this big move higher, much different look here on the right-hand side of this chart. And we start to look left and we start to think about, well, where are we? Well, there's nothing really underneath this 66. That's why we got this breakdown, this harsh breakdown to 58 and change on Penn. Penn is starting to show a little bit of signs, ever so slightly, of stabilization right here. Currently trading up $1 in the pre-market, but we're still seeing that the aileron, which is a separate package, which I do encourage you to put on, as you know that I have it. That's what I have on my charts. And you ask me what I do. Well, this is what I do. This is how I look at things. I look at the daily, I look at the 30. Every once in a while, I'll skip around. I'll look at a little bit shorter if I'm trying to do a little bit short-term trading. And of course, I'll look at weekly also to see the bigger trends that are out there. But basically, my setup is a 30-minute. It's a daily, and I got what's going on top, which no one has but us, which is the autopilot on a multi-time frame. So you could just put in the symbol once. Now let's take a look at this. Bach Box Holdings. Interesting play, a big move up to the high. Kind of midday, this thing always seems to do a little bit of a number and take off. You look at this. This is daily. Let's kind of switch this over to 30 right here. So we got the 30-minute. You can see a lot of times it sees a big move kind of, towards the opening and then a little bit of a consolidation. The last couple of days have been breaking down. You'll see this, and it was from that big high that we saw. Obviously the aileron is starting to roll over a little bit. Momentum is slowing down. Right now trading at 24.36, which is right about, let's see where we are, right about there, which is kind of the low from yesterday. Low yesterday was 24.01. So you're a little bit above that, and then it did trade up dramatically yesterday. Interesting stock to keep an eye on because it has a lot of movement. Affirm, yeah, this has been quite amazing move here. Kind of saw a big drop down overall. There's a short that was called after yesterday. That's interesting. There was a short. Yeah, this is a little funky. Affirm has been on a really great ride. A couple of gap ups, something that we watch quite often and are worried about. You got a gap up right in this section where we're looking at, where you have a gap right here. You have a gap right here. You got some gappiness over here. they got a lot of things going for them. There's a buy now, pay later company that just did a bigger deal with Amazon and a few other companies. Down ever so slightly this morning. Traded up dramatically yesterday, but on the lows of the day, traded up to as high as 166 and change. So interesting move, nice pattern, good aileron overall momentum. Matterpoint, let's do that. Matterport, excuse me, is very choppy, very small, very speculative. Starting to get towards the top ends. Look at that, trying to break above, but can't. Matterpoint is in Matterport. I keep saying that. Matterport is in the Matrix, as I call it at least. They're in the metaverse kinds of names right there, which are tracking pretty well of late. Something to watch. So is Roblox. Roblox came out with earnings. Look at this big gap up right here, all-time highs, sitting at about 90. Where are we now? 97, 91, right about right there, give or take. And trying to look at if it could break out and hold above that long term. A nice gap, overdone a little bit. Some numbers we looked at here was kind of like, hey, if you got over 82, he's in good shape. Well, this was on an earnings number that was just an absolute blowout. And again, another company that's in that same genre. Let's take a couple of yours that you want right here also. Piton. Oh, what a disaster that was, huh? Piton, not looking good, just not looking good. This whole chart wasn't looking very good for a while. Had an opportunity to kick up. It didn't. Had some overhead resistance, when you look from right to left across right here. Look at this big resistance. When you can start putting together touch points on the lines, you got to worry about that. And you're looking at this, there was a big roll on this, and then it did not really gain any traction so far. I don't know what to say about this. I don't really have any numbers on this. There's nothing here that looks any good. Are you hoping for maybe some support right there that could draw some lines to the 51 and change area? Maybe. It kind of looks better down at kind of 40s as the overall potential. I think they're also taking this one to the tool shed for no reason. That's really a good one. It's a little bit much. But that's another story fundamentally. On the Qs, we saw that roll before. We talked about that earlier. Car. I don't know what to say about this. Kind of total super squeeze right there. Probably a lot of action on the out of the money calls that were played. Stock goes from 171 to just about 600 or 550 or something like that in one day. Coming down, looks like support 240. I don't know if you want to play that. Okay. Upstart Holdings is interesting. It came out with earnings. This is a darling for a long time. AI supposedly all about the lending market. I mean, this thing came out. IPO'd earlier in the year. I think this was early in the year. Let's see if how far this goes back. Yeah. What's the date? Yeah. Yep, right at the end of the year. Just kind of a constant move down. Had a couple of moves. You can see this if we spread this out a little bit. A couple of these downstrokes. This is the biggest one so far. Obviously, this move up has been really dramatic. You're talking about 342 to 245. I think we talked about shorting this in the past. That, you got below these levels, it's really kind of an ugly situation. Really not a lot of support. There are some lines like right here, 287, just didn't hold through that gap down. Right now, you're holding on support right there, 253. Needs to kind of hold that unless it's going to start moving lower all over again. Let's see, Disney, somebody's asking me about. Disney finished towards the higher end of its range yesterday. This is a darling love stock. I don't want to go through the whole fundamental thesis that I have on the BS about their streaming when they put that out during the pandemic. You got some, I don't even see where the support line is here. There's, this gap. Look at this gap down right here. I mean, you have potential to get down to 151, I would say. Maybe a little bit lower if it does hold. You got a lot of resistance back up at the 168 level on Disney. What else we got here? Microsoft. What else is interesting here? Okay, let's look at Microsoft. It's just a beauty. Just going along with the NASDAQ. That's all that is. Looks just like the NASDAQ. Ready? Watch the screen carefully. Doesn't it look like the NASDAQ? Same chart. Because it is. It's running with it. UNG, a lot of people ask about that. That's natural gas. Currently trading down about 2%. Momentum's off. Is it done? Is their run done? I don't know. Starting to see some pressure in the coal area. And, that will kind of, as you go back and forth between coal and you go back and forth with natural gas, you got to wonder if you're going to see a substantial amount of opportunity, one versus the other, depending on how prices move. Let's take a look at the movers this morning real quick. $7 growers, this is kind of a name that every once in a while gets a pop for no particular reason. These companies is pretty interesting. Blink Charging, ChargePoint, the idea that the infrastructure bill is going to put a lot of money into the charging is kind of a cool situation. So you got to watch those and all the EV companies, obviously, with what's going on there. Let's see if there's any, I think there's a couple of EV companies on the downside. Yeah, Ride, Lordstown Motors, some news out today, down 11%. Any others? Let's see. Nothing on the list there. I don't see any on this list besides that one we picked up right there. So EV's been hot for a number of days. You got to question how much of that's going to play in. We've also seen that things like any of the renewable energies have been pretty good. Look at TAN, T-A-N, which is the ETF that does solar coming up. The other one that's been interesting recently has been KWeb. KWeb, now there's a consolidation through time for you. And it's a deep range here. I'm going to extend this out a little bit. Still got to get above that 54 line, but look at this. This is the Chinese internet shares. This is the kind of Chinese tech. Came up from about 105 down to about 47. It's been coming up and down. I've traded this a few times. I think I've told you that. We've talked about it here, as a matter of fact. I think that there's opportunity here, but once you get above, you got to get above this level of about 50, 54 and a half to really have anything spectacular going on with that. All right, with that, we are out of time. I want to thank everybody for joining us this week and every week, and mention that you can go over to TriggerCharts.com or our YouTube channel to see replays of this and past discussions. I think that it's important to understand what we learned today, where markets trade in two ways, and I think that's extremely important. And the bias of do not short, do not long, above or below the lines. I think if you could just stay with that and utilize that, write that down, look left always, those components of the rules, just stick with those. I think you probably have a good trading day. Let me know what happens, and thanks so much for joining me. I'll see you again next week.